Hi class, today we'll be looking at Chapter 6, Problems 6 through 10b. You should be able to see my Excel screen now, and we're going to be looking at Chapter 6, Problems 6 through 10b. The first problem we're going to look at is Chapter 6, Problem 6b. Adams Incorporated pays its employees weekly wages in cash. A supplementary payroll sheet that lists the employees' names and their earnings for a certain week is shown below. Complete the payroll sheet by calculating the total amount of payroll and indicating the least possible number of denominations that can be used in paying each employee. However, no employees are to be given bills in denominations of greater than $50. If an amount does not require an entry, enter 0. And most of these employees, you're going to do this supplementary payroll sheet the same way. So I'm just going to do maybe 2 or 3 employees as an example, because it gets monotonous after a while. And I'm sure if you can do one, you can do all of them. So we're going to start with the first employee, who is Ben Dowd. And you can see that he is being paid a net amount of $639.57. And what they're doing is they're paying him in cash. And so we've got to choose the number of bills that will be given to the dollar amount of bills that will be given to each one of these employees. But we're starting again with Ben Dowd. Since he's going to be paid at least $600, the first thing I would do is I would try to see how many times $50 could go evenly into $600. So what I did is I created a formula to do this, but you don't have to do that. And you can do this in many different ways if you want to. But since I wanted to know how many times $50 would go into 600 evenly, I took $600 and divided it by 50, and it gave me that I would need 12 $50 bills in order to pay Ben Dowd $600. Now, obviously, he's going to be paid $639.57. But what I did is, I think this is probably the easiest way, is to figure out how many times $50 will go into this evenly. And it would be 600 as the even dollar amount divided by 50, which will give you 12 bills. You need 12 $50 bills to pay $600. The rest of the amount that he is to be paid is $39.57. So because $20 will only go once into $39, we'll need one $20 bill. And that would bring us to a total of 600 for $50 bills plus one $20 bill, which would be $620 as a total. Now we're looking to pay him at $639.57. So we've already accounted for $620. We're going to have to pay him a $10 bill to bring it up to $630. And then we're going to have to figure out the number of bills that we would need to pay him $9.50. So we need one $5 bill, and then we need 4 $1 bills to bring it up to $639. And then for 57 cents, we'd need one 50-cent piece, and we would need 1 nickel and 2 pennies to pay him his entire $639.57. Let's look at Don Ruiz next. in Don Ruiz, you can see that they're paying him $491.95. And so we first of all got to figure out how many bills, $50 bills, do we need that we could go evenly into. This time I'm going to use $450. So $450 divided by $50 bills means that you need 9 $50 bills in order to pay Dot Ruiz. And if you multiplied 9 times 50, it will give you $450. So that would leave us with $41.95 we would have to account for. And we could get 2 $20 bills out of that $41.95. So that would bring us up to $490 even once we add in the 2 $20 bill amounts. So it's $450 for the $50 number of bills of 9. And then we're going to add $40 more to that to bring it up to $490. And then we just have to account for $1.95. So I'm going to go over here and pick up $1. And then I would have to account for 95 cents, which would be 50 cents, and 25 cents, which is 75 cents, and then 2 dimes. So 75, 85, 95 cents that we would have accounted for. So all they're doing is they're trying to account for the net amount of pay, and they're paying them in cash. And so you have to determine the number of bills. So I think that's enough of the examples to get you started. You do all of them the very same way. And you can refer back to this sheet if you want to, because I'm going to attach that, or I'm going to make it available in Blackboard for you to look at, this Excel spreadsheet. So I'd like to go on to the next problem, which is 6-7B. And in this problem, we're going to be Carmen Santos. We are going to be the owner and the sole employee of CS Corporation. He pays himself a salary of $2,400 per week. Additional tax information includes FICA taxes of 6.2% on the first $137,700. The FICA tax HI is on his total pay, so it doesn't matter how much he makes, he still has to pay FICA taxes of 1.45%. The federal income taxes that is taken out of his pay each payday is $532. The state income tax is 22% of the federal income tax withholding. So you're going to have to calculate that by taking 22% and multiplying it by $532, and that will give you the state income tax. Then, because this person is also the owner, he's going to also be his employer, and the employers have to pay federal unemployment tax of 0.6% on the first $7,000 of wages earned. They'll also have to pay state unemployment tax of 0.05% on the first $14,000 that were earned. The additional payroll deduction includes a 401k plan where he contributes 3% of his pay for the week, which was $2,400. You'll have to find the amount for the 401k plan deduction. He also has to pay child support, and so he gets that deducted out of his paycheck. And then he also buys health insurance premium, and he gets that deducted out of his paycheck too. What they want you to do in the first journal entry is to record the payroll entry only. The payroll entry is just what would affect the employee. So what we're going to do is we're going to have to calculate the amount of taxes. So hold off, well, actually you can go ahead and debit the wages expense too for the total amount that you're going to pay him for this period of time, which is $2,400. Notice that his year-to-date pay is $51,500. So if you add $2,400 to that for this week, he's not going to be anywhere near the FICA base. So all of his pay of $2,400 is going to be subject to the FICA OASDI tax rate. So the wages expense that we're going to be paying this employee is $2,400. That's given. We debit wages expense because it's an expense account and our expenses are increasing for this company. We're going to have a credit to the FICA taxes payable for OASDI, which is 6.2% times the $2,400. And that brings you to $148.80. For your HI, we're going to credit the FICA tax payable. Again, we're crediting our liability accounts here. Because we're crediting a liability, we're increasing the amounts that we owe to the government in this case. And we're going to owe for our FICA taxes payable the portion of HI. And we're going to find this $34.80 by multiplying 2,400 times 1.45%. That's how you get $34.80 as the amount of FICA taxes that is withheld from his paycheck. Remember, this is the employee's paycheck that we're withholding these amounts from in this first journal entry. We're going to also credit the employee's federal income taxes payable. We credit this because the employee's federal income tax payable is a liability. To increase the liability, we will credit. The amount of $532 was given. The amount is given right here, and we're going to credit the liability account for that. This employee also has to pay some state income taxes payable. So we're going to take the $2,400 and multiply it by the state income tax rate, which actually is 22% of the federal withholding tax. So let me restate that. 22% is going to be multiplied by $532. That's how I get the employee's portion of state income taxes that is credited to his account. We credit it because it is a liability. We are increasing our liabilities. To increase our liabilities, they go up on the credit side. This employee is also contributing to his 401k plan. They call this account retirement plan contribution payable, but this is for the 401k plan, and it's 3% of $2,400, which amounts to $72. He also was garnished for his child support. So he has to pay child support of $125 per paycheck. And so this too is a liability. We will credit it for $125 because our liabilities are increasing. He also made a contribution to his insurance, and we're going to call this health insurance payable. And it is credited because we're increasing the amount of the liabilities. Now, the net pay that you would pay to this employee is found by taking the gross pay and subtracting out all of their deductions from their pay. The remaining amount is $1,260.36. That's the amount that you're going to actually pay this employee. Because this is a sole proprietorship form of business, the owner also has to pay taxes to the government for FICA taxes, and most of the time they would have to pay for FUTA and SUTA taxes too. But in this payroll period, we've determined that $51,500 is the amount. Since he's the only employee of this company, we can determine that we've already taken out the amounts for the SUTA and FUTA. So when you're doing the employer's journal entry right here, which starts with the payroll tax expense, you'll notice there's no place for FUTA and SUTA, because the FUTA and SUTA taxes have already reached their ceiling. In this particular pay period, we would not withhold anything else for FUTA and SUTA. But we do have to match what was taken out of the employee's pay for FICA. And so I just copied that amount down here for the OASDI portion. It's the same. And the HI portion is also the same. So the total of these two added together is the total of the payroll tax expense. And again, because we've already reached the ceiling for FUTA and SUTA, there would be no FUTA taxes payable or SUTA taxes payable withheld in this particular problem. So I'm going to move to the next problem, where we're going to be the employees of Porto Negro Company. I know I murdered that one, but this particular company, they earn wages of $15,600 for the 2 weeks ending April 12th. The FIT taxes were $424 that were withheld. That's the federal income taxes. The entire amount of wages is subject to the FICA taxes, but only $10,800 is taxable under the federal state unemployment compensation laws. So this is going to be the base for the FUTA and the SUTA. So you have to keep that in mind when you're making your calculations for your journal entries. The state contribution rate of the employer is 3.9%, and all employees are subject to state unemployment contributions. That's something that's new in the journal entry for this. Some employees have to pay unemployment contributions to their state. If it's a state that has a whole lot of people that are unemployed, they have to find the money to pay those unemployed persons. So they deduct it, in this case, out of these employees, as well as the employer would have to contribute to the unemployment taxes for the state. And they are also taxable on wages up to $10,800. So this $10,800 is the same for the federal unemployment tax and the state unemployment tax. And the employee's contributions are to be deducted by the employer. So what they want you to do is journalize the payment of wages and record the payroll taxes, assuming the contributions for the employer and the employees are recorded in one account, the SUTA taxes payable. So the first journal entry is only going to be for the employee's portion. We're going to debit our wages expense for the total of the gross payroll that we're paying in this period, which is $15,600 that was given. We debit the expense account because it increases on the debit side, and we're adding to our wages expense. We're going to credit our FICA taxes payable for OASDI The credit is a liability account. The payable is a liability account. Our liabilities are increasing. To increase a liability, we would have to credit. I will multiply the amount that's subject to OASDI taxes. And it told you the entire amount of wages is subject to the OASDI taxes. So this 15,600 would be multiplied by 6.2%, and that will give you $967.20. For your HI portion, you're going to take the 15,600 again, multiply it by 1.45%, and that's how you get the credit to the FICA taxes payable. Both of these are liabilities. They increase on the credit side. That's why we're putting them in the credit column of the journal. The employee's federal income taxes payable was a given amount of $424. So just plug that in there. That was given. It too is a liability, so it would be credited. And in this situation, the state is requiring all employees to be subject to state unemployment contributions of 0.5% on the wages of 10,800. 10,800 times 0.005 will give you $54 that is owed by the employee to pay for SUTA taxes. And again, not all states require employees to pay SUTA taxes, but this is a state that is requiring the employee to pay SUTA as well as the employer. But this is the employee's portion. This is a liability, so that's why we credited it. And then we're going to credit our cash for the net amount that we paid to our employees, which is the gross amount less the deductions from their pay. The net pay is $13,928.60. They also wanted you to record the employer's share of taxes. I'm going to start by matching my FICA taxes payable for OASDI with what I recorded here. So $967.20 is credited to the FICA taxes payable because the employer has to match what the employee puts in for OASDI. The same is true for HI. We're going to match what happened up here. It was 15,600 times 0.0145. And that will give you the HI portion of the FICA taxes. Both of these are liabilities. They're going up on the credit side. The employer also has to pay federal unemployment taxes, and that would be based on the amount that is subject to the federal unemployment tax, which they gave you in this problem. 10,800 is subject to the federal income taxes. So on this particular date, we need to multiply 10,800 times 0.006, and that will give you $64.80 that is going to be turned over to the government for the federal unemployment taxes. The employer also has to pay the state unemployment tax, and that's based on the amount of 10,800 that we would multiply by the state rate, which is 0.039, and that will give me $421.20. All of these credits added together will equal your debit to your payroll tax expense. The employer's payroll tax expense has increased to increase an expense, you put it on the debit side. So the total of all of these together is $1,679.40 that would be debited to this account. It's always a good idea to check to make sure that your total debits equal your total credits. Moving on to the next problem. The following information pertains to the weekly payroll of Fannie Fashion Company. The total wages earned by the employees are $2,910. The state unemployment compensation insurance rate is 3.75%. The entire amount of wages is taxable under FICA, FUTA, and SUTA. The amount withheld from the employee's wages for the federal income taxes is $491. For state income taxes, it's $49.10. And for group insurance, it's $87.10. So we're going to start by journalizing the entry for the employee. We're going to pay them a net amount of $29.10 that was given. And we have to withhold taxes, FICA taxes of 6.2% of that $29.10. So the amount of $180.42 is $29.10 times 6.2% for OASDI. We credit the OASDI because it is a liability account and your liabilities are increasing. We're going to do the same thing for our FICA taxes payable. We're going to multiply the $29.10 times the HI portion, which is 0.0145. We're going to record the liability for the federal income taxes payable, which they told you was $491. They also are going to credit the state income taxes payable for $49.10. And we're going to also credit our group insurance premiums that were collected. And the group insurance premiums was $87.10. All of these are liability accounts. They increase on the credit side. Your cash account, however, is an asset account. Your cash account is going down by the net amount that you're paying. The net amount is determined by taking the gross pay and subtracting out each one of these deductions to the employees' accounts. The net amount that we're going to pay in cash is $2,060.18. Cash is credited because it's an asset account and it's going down. And that's the journal entry that we would record for the employee. For the employer share of taxes, we're going to debit our payroll tax expense because expenses increase on the debit side. We don't know this amount until we have determined what the employer has paid as far as FICA taxes, which is the HI portion of this. Oh dear, I've got something wrong on this spreadsheet. So let me fix this for you. This should be OASDI. So let me see if I can get this out of here. And we're going to indent because we're crediting. And the FICA taxes payable for the, whoops, let me spell that right. For the OASDI would be 6.2% of the $29.10. which would be $180.42. I'm going to insert a line here. I don't need to insert a line here. I just need to delete this right here. Hold on just a minute. Delete. There we go. And I'm going to indent, and I'm going to put FICA, taxes payable /HI. And they would be $42.20. I just copied that down here. So you would have OASDI taxes and FICA taxes, and then you should have FUTA taxes payable, and that FUTA taxes payable is going to be the 2910 times 0.006. That's how I get the amount. And we have a credit to SUTA taxes payable for $109.12, which you should, I'll have to move some things around for just a second. You should go ahead and round that to the nearest cent. And so it would be that. And then this would be the total of all of these added together, which is your total payroll tax expense. Your payroll tax expense is debited because expenses go up on the credit side, and it's for the amount that the employer put in as far as taxes were concerned. And this employer would be putting in OASDI taxes, HI taxes, FUTA, and SUTA taxes. So all of these combined together will give you this. And so that's the journal entries that we would record for this particular problem. And I'm going to move to our last problem, which is a short problem. It says on December 31st, the Santucci company had a balance of $619.24 in the FUTA tax payable account. This represents the employer's liability for the fourth quarter taxes. And what they want you to do is to journalize the entry that you should make in January to record the last transfer payment of FUTA taxes. In other words, we're paying off the liability that we owed. To pay off a liability, you have to decrease the liability account, and you decrease the liability on the debit side. So we're going to debit this account for the amount that we paid in federal unemployment taxes. We've handed this over to the government. Our cash is credited because cash is going down, and to make the asset cash go down, you would credit it for $619.24. So this is a journal entry where they're showing that the employer is handing over to the government the amount of their federal unemployment taxes that are owed. And that's all I want to talk to you about in this chapter, or not in this chapter, but in this particular set of problems. There'll be another couple of videos probably that we're going to do for the remainder of this chapter. So we'll stop sharing this with you, and we'll see you again next time. Bye-bye.